Hi friends, today is 28th September and this video is on 25th chapter of Right to Recall Party Manifesto. Right to Recall Party Manifesto you can download from rahulmehta.com/301.htm, and 25th chapter is about taxation. The main proposal is enact wealth tax, enact inheritance tax, remove VAT, service tax, remove GST, and also reduce and streamline income tax. So the purpose is not to get rid of taxation. It is not possible. Of course, there are a lot of politicians which will always say get rid of all taxes, etc. That is nonsense. But there is a valid issue when it comes to taxation, is that what should be the tax law? What laws should be printed in the Gazette to implement the taxation? By Gazette, I mean the law as well as the instructions that chief ministers and prime ministers give to collector and income tax officer and everyone. So there is a, depending on nature of tax, it will have different effect on strength of military, strength of police, strength of court, level of population, how educated it is, and the taxation laws, tax laws do affect these parameters. How will it affect? For example, will consider wealth tax. Wealth tax of, let us say that the tax law says that we will tax 1% of the wealth more than 25 square meter per person, which is the law I have proposed. In urban area, 25 square meter per person, 250 square feet per person. So family of 4, husband, wife, 2 kids, and a senior citizen will have twice the quota. Their exemption will be 1500 square feet of land and 3000 square feet of construction. Till that it will be tax exempt, and after that the tax will be 1%. So if somebody has a huge bungalow or has a 10 flat, 5 flat, 15 flat, then for 1 flat, 2 flat, 3 flat, the tax will be probably 0 or negligible. But after that, the tax will come as 1% of the property. This is one form of tax, and another is, let us say that you decide to have that, no, instead of wealth tax, we will tax tea, coffee or tobacco. Then in which taxation formula poor will pay higher percentage of tax? That is called as regressive taxation. The most important concept in taxation is regressiveness. What is regressiveness? That the person who is making less money ends up paying higher percentage of his income as a tax. Not total amount, but higher percentage of his income as a tax. Now you may think that it is counterintuitive, that how is it possible that any tax law, how is it possible that a person who is making less money will end up paying higher percentage of his income as a tax? Well, tax on tea, coffee, tobacco form one such example. Similarly, tax on movie tickets. How? Let us say a person is earning 100 rupees per day and he is taking 2 cups of coffee, so 10 rupees of coffee, and tax is, let us say, 1 rupee on sugar, tea, leaves, etc. So how much tax he paid? He paid 1% of his income as tea tax. Now consider a person who is earning 1000 rupees a day. He is not going to have 10 cups of tea. He will probably have 2 or 3 cups of tea. So he pays 4 rupees of tax per day, that is 0.4% of income. And consider a person who made let us say 10,000 per day. So he will probably pay 10 rupees of tax, so that is 0.01% of the total tax. So you can see here that as the income increases, the percentage of the income that is paid as a tea tax decreases. Similarly, consider the entertainment tax, that once upon a time in Gujarat and all over India, it is not just Gujarat, in 90s and till 2005 this discrepancy was there, that the tax on ordinary theatre was 100% of the base price. So the ticket base price will be about 25 rupees and the tax on it will be 25 rupees, that is total ticket price will be 50 rupees. And the tax on 99 rupee multiplex was just 1 rupee. So somebody who is earning, let us say, 3000 rupees per month, he will not be able to buy 100 rupee ticket, so he goes to a rundown theatre where the ticket price is 30 rupees. So he buys ticket of 15 rupees. On that, the entertainment tax is 100%, that is another 15 rupees. So let us say he sees 4 movies, or 2 movies, so he ended up paying 1% of his income as entertainment tax. And somebody who is earning 50,000 rupees per month, he goes and, let us say, watches 5 movies in multiplex. He paid tax of just 5 rupees, that is 0.01% of his income as tax. So entertainment tax is also a regressive tax. So what is a flat tax? Flat tax is that when the tax is X percentage of your income or wealth, whichever, and the X does not increase. If your income or wealth decreases, X does not increase. If your wealth or increase decreases, that is called as flat tax. And progressive tax is where, as the income increases, the tax rate increases, as the wealth increases, the tax rate increases. I am not a believer of progressive tax, but we must abolish all regressive taxes. The model I propose is flat tax and slightly progressive, maybe if there is a dire need for military or police or court. But all regressive taxes must be abolished. Some of the key regressive taxes: tax on food. Tax on all food products are regressive. In certain cases, let us say the tax on tobacco, tax on liquor, if it is used only for health and not for any other purpose, then there is some level of, you can say, justice or fairness in it. But if the tax is used for general purpose things like paying salary of officers, so similarly, say all tax on food, such as there is a direct and indirect tax on sugar, there is a lot of direct and indirect tax on edible oils in different format. Sometimes it is in form of excise, sometimes it is in form of sales tax or GST, or there are several different formats. But by and large, any tax on food, let us say there is a tax on oil, then it is a regressive, because a person who is earning, let us say, 5,000 rupees a month, he consumes 2 kilogram of oil, he pays, let us say, 20 rupees of tax. Then the person who is earning 50,000 rupees is not going to consume 20 kilogram of oil, and is not going to pay 200 rupees of tax on oil. So now, as I said, that we should abolish all regressive taxes. So one regressive tax is, that is one aspect of taxation. Another is that cost of compliance. What is cost of compliance? Is that how much paper will I have to preserve in my office for how many years to prove that I have obeyed all the tax law. For example, consider wealth tax. Wealth tax is levied once a year. So only piece of paper that I need to preserve is that this is my property document, these are my measurements, this is my land area, and if I lose the document, fine, government office will always have that document. And construction area, that is always there with municipality officers. And I need to keep only one paper with me, that I have paid the tax of last year. And the fact that I have paid tax of last year means that I have paid the tax of all previous years, because otherwise they should not have taken the tax of last year. If the tax of 2004 is pending, then the tax of 2005 should not have been collected to begin with. First it should be 2004 which should be collected. Anyway, so wealth tax is the simplest in the sense that I have to keep only 2 or 3 pieces of paper. In case of sales tax, how many pieces of paper I have to keep? All the sales that I have made, purchases and sales, I have to keep the paper. I have to keep the proof in case of VAT and GST. I have to keep the proof that I bought a particular goods from XYZ. I have to keep the proof that he paid the tax. What if he does not pay the tax? Then on paper I am not guilty, but the officer can always say that your bill is a forgery. So I have to keep proof of payment, I have to keep all the invoices, and the receiver can always say that, well, he never paid me. So all the payment related proof, so that means that if I am doing 10,000, 50,000 transactions a year, buying and selling, then I have to keep all those 50,000 papers for 3, 4, 5, 7 years. Income tax limitation in India is right now 4 years, but it can go up to 6 years. And same is service tax. Service tax limitation is 4 years and it can go up to 6 years. So this cost of compliance, that how much paper headache person will have to keep, is also an issue, because that decreases the efficiency of the taxpayer. So now what should be the tax law? I just gave you basic description about the concepts. Tax law that I am proposing is wealth tax. Wealth tax on agricultural land is as up to 2 acre per person per family member will be tax exempt. So farmer family, let us say husband, wife, 3 kids, up to 3 kids will be allowed. And then senior citizen will of course have twice the quota. So if he has 1 or 2 surviving parents, then it will be 6 into say 1 surviving parent. So 8 acre, up to 8 acre, there won't be any wealth tax. So that will take out more than 90% of the farmers. And after that it will be 1% of the agricultural market value, which could be different from commercial market value, because if the land value of the land depends on the purpose, and the purpose is sometimes fixed by the government. For example, what is so called agricultural land? Agricultural means that government has issued a order or whatever that this piece of land can be used only for agricultural purpose, it cannot be used for residential, commercial or industrial. These are the 4 general purposes in which the land use is classified: agricultural, residential, commercial and industrial. And of course commercial will pay the highest, then comes industrial and residential, and agricultural the prices are least, because of the in case of agricultural only money you make is the food that you can sell. So there are per acre revenue can rarely exceed 1 lakh rupee, and income, because from that 1 lakh rupee one has to pay labor and everything, 1 lakh rupee per acre, and income will rarely exceed 20 to 30,000 rupees. These are the best case scenarios, some of which I am giving. Of course it can vary. So main thing is wealth tax on non-agricultural land. That is one of my main proposal. That proposal will do magic in economy literally. How? The wealth tax of up to 250 square feet per land and 500 square feet per construction will be 0, and thereafter it will be 1% of the market value. How will the market value be decided? In the beginning it will be what is called a circle rate. In Gujarat we call it jantri. In northern area like UP, Bihar, in Haryana it is called a circle rate. So whatever is the circle rate, and then circle rate can be revised. So if somebody has 1 or 2 flat and a family of 4 or 5, the wealth tax on him will be practically 0. But let us say somebody like Sharad Pawar, who has got 10,000, 20,000 flat in Pune alone, or maybe more, and then miles and miles of land in Mumbai, or somebody like Robert Vadera, who has got miles and miles of land across Delhi and Gurgaon, etc. They will end up paying 1% of the market value, which will be a huge amount. So what will happen is that they will start renting or selling the land, they will start renting the flat or selling the flat, in which case the price will drop. So wealth tax will provide all the necessary revenue that is needed for police, military and court. Second is inheritance tax. In US, Japan, US has wealth tax, almost all developed countries have wealth tax, and they became developed because they have wealth tax. Their military and industrial strength started increasing only after they implemented wealth tax and inheritance tax. Wealth tax is about 1% to 2% in USA. It varies from district to district. In Germany it is about 3%. I don't know in Japan, but most countries have wealth tax. Inheritance tax, as I have proposed, when a person expires, each heir means husband, wife, one of them has passed away. So either wife or husband, and 2 or 3 sons, at most 3 sons, or any heir. If he has one less son, then maybe parents become heir, his father or mother. So up to 100 square feet of land per heir, non-agricultural land, and up to 2 acre of agricultural land, and per heir up to 50 lakh of other wealth will be tax exempt. And after that the wealth tax will be 35% of the wealth he has. So if somebody has wealth of up to 4-5 crore, then pretty much wealth tax will be 0. But after 3 crore, 4 crore, the wealth tax will be 35% of the wealth. He can take out 2-3 crore here or there by underpricing the value of land and other means. But if somebody has land of 10,000 crore, then there is no way he can get exemption on more than 10, 15, 20 crore. On remaining 10,000 crore, he will end up paying 35% of the wealth as a tax. US has wealth tax rate of about 35% to 45%. Britain has wealth tax rate, inheritance rate, tax rate in USA is about 35 to 55%. In UK it is 50 to 60%. In Japan it is 50-60%. In Spain it is 25% to 70%, depending on different criteria, whether the person who is getting is a blood relative or not, and several other criteria. So what is the basis behind wealth tax and inheritance tax? Wealth tax is, first of all, what is the basis behind taxation? Taxation is that you have wealth, fine. Purpose of taxation is not to take money from the rich and give it to poor. That is all nonsense. The people who talk about Robin Hood tax or such tax are in reality agents of elite, and they are misguiding the common. The purpose of tax is that the government has to maintain military, police and court. What will happen if there is no military and police and court? Your wealth will disappear. Some criminal will take it away, or a Pakistani will take it away, or Bangladeshi will take it away, or American will take it away if you do not have military, police and court. So who will pay the military, police and court? Well, if somebody is guarding your house, who will pay that guy? Of course you will pay. If somebody is guarding my house, who will pay? I will pay. Now, as far as police is concerned, court is concerned, military is concerned, nobody has been able to invent a meter. For example, in case of electricity, there is a meter. So I say that, okay, I consume 100 units, so I pay this much. You consume 50 units, so you pay this much. But that is because there is a meter. For case of road, there is some meter in the sense of toll. But for a big part of road, there is no meter. So everybody is asked to pay property tax. There is no measurement that I used road twice more than you did, or you used road 10 times more than I used. So when there is no meter, the cost has to be distributed pro rata without knowing whether you actually used it or not. So the fact that your property is there, criminal has not stolen it, Pakistani has not stolen it, American has not stolen it, that means you use the service of police, military and court, and therefore you pay the expenses needed to maintain police, military and court. So now who should pay how much? Let us say we decide to tax tobacco. So is it that the person who is taking twice the tobacco is using twice the military? Is Pakistani or are Americans going to come here to steal the tobacco or stop me from taking tobacco? The biggest asset in any country is minerals and wealth and land. So the military, police and court in reality exist to protect the land and protect the minerals and so forth. And therefore there is a tax that I am proposing on land. And as far as the tax on mineral goes, I have covered it in chapter 5, MRCM proposal, that 30% of whatever that is coming from the minerals will go to fund the military. 35%. So now land is taxed to pay the expenses of police, military and court, because police, military and court are needed to protect the land. So what is inheritance tax? Inheritance tax is a deferred wealth tax. Wealth tax means that, okay, the expenses are coming to the tune that you will have to pay 2% of your wealth tax or 4% of your wealth tax, say 2%. But 2% can be too high for some businesses to continue. So you pay 1% now and 1% when you die. So in that case, inheritance tax is a deferred wealth tax. Deferred means postponed. Postponed wealth tax which a person has to pay when he dies. And it is most benign form of taxation because tax is collected after society has done the job of protecting your wealth till you die. Imagine that your guard says that I'll protect you till you die, and after you die I'll take my salary. So all your life I am protecting you, and the fact that you lived for 60, 70, 80 years means some Pakistani or American did not kill you, and the fact that at the time of dying you have 100 crore, 200 crore, 500 crore of wealth proves that the military police court protected it from local criminals, Pakistanis and Americans, and therefore at the time of death they are asking for 1/3 of the wealth as to cover the expenses of the protection. So inheritance tax is more benign in the sense that the person is asking for money after he has delivered the goods. See, inheritance tax should not be seen. Of course you can see where you like, there is no issue in that. But one people see is that, oh, this guy is getting money and government is taking 35% of it. I see it other way, that government protected somebody's money throughout his life, and after he dies, government is taking 35% from the person who died. Then next tax related proposal is reduction in income tax. Income tax I propose two slabs, 10% and 10 plus X%. X will depend on how much military is needed. It can go as high as, it can be as low as 5%, it can be as low as 0%, it can become as high as 50%, all depends on how much military is required, and that is difficult to tell because we cannot tell how much Americans and Pakistanis and Chinese are going to spend on their military. Say our tax rate is 10% and 15%, fine. But suddenly China or Pakistan or America start increasing their military expenditure, then we don't have option but to raise our military expenditure. In which case our tax rate will go up. From 10% it can go to 20%, and the one which is 15% can jump to 30%. But abolishing all the regressive taxes like VAT, abolish octroi, and octroi is of course abolished in most of the cases. Custom duty should be there. In custom duty of 300% on almost all goods except natural resources, there should not be custom duty on any natural resources such as crude oil or silver or gold or any metal or wood or such natural resources. But anything other than natural resources, the tax should be 300% of its value. So, and 100% of that, matlab 1/3 of that, will be divided equally among citizens to ensure proper enforcement. Then abolishing many exemptions. For example, right now there is tax exemption given to charities, wealth tax exemption given to all charitable trusts, that should be cancelled. In the wealth tax law that I have proposed, nobody gets exemption. Today there are so many exemptions of different kinds that total wealth tax collected in entire India in past year was something like 200 to 300 crore. That's all. Entire country paid wealth tax of less than 300 crore. Why? Because one house per person is exempt. The house can be as big as 50 crore, 500 crore, that whole house is exempt. One house per family member plus one house per HUF. And then all commercial property is exempt. So I can have 10 offices, all of them are tax exempt. Rented property is tax exempt. Then property use possession is not taken, tax is not tax. So what many people do is that they will not take the possession, leave it with the builder, and at the last moment the sale will be on the books. So one speculator will sell it to another speculator, and still the sale has happened only on the books of the builder. So neither party has taken possession, so neither party will pay any wealth tax. So all these loopholes should be clubbed, and wealth tax should be 1% of the wealth, about 25 square meter of the area. Now other tax proposals are national ID system, then abolish HUF. All the wealth and income of HUF should be bracketed with the Karta's income tax return. So no, not abolish the HUF per se, let HUF continue, but all the HUF's income will be added to Karta's income and it will be tax prorated. Now, how the wealth tax will be collected, I have given the details in section 25.5. There are some technicalities that I say one exemption per person is 250 square feet. Well, what if there is a joint family of 15 people and they have a big bungalow? Then there will be exemptions, but then what if the exemption add up to 3000 square feet and the size of the bungalow is 4000 square feet? So to deal with all the cases to the lowest level of detail, I have proposed the technical, very technical laws to this, that in such cases 66% of the property will be tax exempt and the remaining 33% it will be taxed at the market rate. Now a question comes is that what if the person is not able to pay the tax? Then should government confiscate the property? Answer is no. What will happen is that the wealth tax bill will keep piling up, and on top of it there will be interest of, let us say fixed deposit interest is 12%, say 9%, so the interest on the wealth tax will be 12%. Penalty interest or whatever you call. And when the person passes away or when he sells the property, at that time the tax will be covered. And the tax rate on the person who is more than 65 years will be less. So this makes sure that the taxation is quite fair. Now, what about double taxation? Double taxation is that, let us say I have a flat of 50 lakh and one person, so I pay 50,000 tax on it, and then I rented that flat for, let us say, I rent is 20,000 per month, so 2,40,000 a year, and on that I pay income tax of 30%, that is about roughly let us say 60,000, 65,000 per year, roughly. So isn't that double taxation? So reduce that double taxation. I have proposed that whatever the wealth tax that I have paid in past year, 5 times of that will be deducted from my total income. So if I have paid wealth tax of 50,000 rupees then last year, then in this year's income, 5 times multiplied by that, that is 2,50,000 will be reduced from my income. So effectively, if I got a rent of 2,40,000, then my tax on rent this year will be 0. So all the wealth tax paid in previous year will be deducted, 5 times of that will be deducted, so there won't be any double taxation. Lot of economists say that wealth tax is double taxation, they are agents of elite men. See, every economist is a paid economist, that you must be knowing by now, that every journalist is a paid journalist, every editor is a paid editor, every columnist is a paid columnist, every textbook historian is a paid historian, and every economist is a paid economist. You take any undergraduate textbook of economics, it will not talk about regressive taxation. It will also not give you definition of rupee, which is my last video, E2401. E2401 is about, E2301. E2301 is about money supply, that how rupee is manufactured, how manufacturing of rupee impoverishes lot of population and so forth. No economics textbook will tell you how much is the rupee in India. I ask MCOM people, BCom people, BA economics people, that how much is the rupee volume per citizen in India, and when I ask them, I don't expect the number like 62,500, which is the number. If it is 62,000, any number they give me between 50,000 and 70,000 is correct. Or even if they tell me that, well, I did my economics 4 years back, and 4 years back rupee supply was this many rupees, say 50,000 rupees per citizen. Any valid number is a valid answer. They look at me with a stare, is that what sort of question is this? I never heard of this question. So I explain them that this is the question. That amount of rupee means that everybody's how much currency you have plus fixed deposit you have divided by total population. So they say, yeah, it is a good question, it's a valid question. So I ask them that it is not that you do not know the answer, they have never come across the answer. So BA economics people, it is not that they do not know what is regressive taxation. They have not even come across the concept of regressiveness, because the paid textbook writer, the paid economist who wrote their textbook wanted to make sure that they should not know about this concept. Why? Because rich man, the elite man who pay these textbook writers and politicians who pay these textbook writer do not want students to know about this concept. And therefore, they do not know about the concept of regressive taxation or taxation in general. So, how taxation law also affect military? Because if you are having sales tax, and if you put tax rate of 30%, then there will be large scale evasion, and it will also impoverish the bottom 30-40% of the population. And therefore, you cannot raise sales tax to a point. Whereas wealth tax you can make from 1% to 2%, you can scale it up that for up to 3,000 square feet, it will be 0%, from 3,000 square feet per family to 10,000 square feet, it will be 1%, and after that it will be 2%. So that way more money can be collected. Second, wealth tax reduces the purchasing capacity of those who already have a lot of wealth. It does not reduce purchasing capacity of those who are at the bottom. And that is not the point. Point is fairness. That police, military and court, they benefit more who has more wealth. It is prorated with the wealth. If I have a bungalow which is in 2 acres and it is worth 100 crore, then I am consuming bigger portion of the military than a person who is living in a hut, or a person who is just having 3-bedroom hall kitchen flat which is worth only 50 lakh of rupees. Then also comes the question of evasion. Wealth tax is most difficult to evade. Why? Because you cannot hide the land. You can hide maybe 5% of the construction, that you have some basement or some loft or maybe balcony which is not in the official plan of the with municipality, but you cannot hide 100% of the construction. You can't even hide 25% of the, even that will be difficult. So wealth tax on land, evasion will be 0%. Wealth tax on construction, evasion will not be more than 10-15%, maybe 25%. But in case of sales tax, the evasion can be 100%. How? I simply take the cash and do not give the bill. So sales tax in fact encourages without bill economy. In case of VAT, you can say that okay, people will have to bill give because there is a whole chain. Not the case. There is VAT in Gujarat, there is VAT in UP and many states. Go to any shop. The shopkeeper will tell you that this is the price with bill and this is the price without bill. Where is the claim was that the VAT will remove all the without bill trade. Nothing happens. There is a parallel chain of whole goods from factory to shop. There is a flow of without bill and there is a flow of with bill. And bigger problem with VAT is that person has to keep all the transaction records with him, and officer can harass him in case of wealth tax. If you have paid the wealth tax, there is no, he cannot even send you a notice, he cannot even send you a summon. So I'll summarize. First, we need the tax in India has to increase because we have to improve our military court and police. We need tax. What is the moral basis for taxation? Moral basis of taxation is military, police and court, that we require military, police and court, and therefore we have to impose taxation. Second, what is the least bad form of tax? See, every form of tax is bad. Nobody will say that, nobody can say or will like to say that tax is good. Nobody, you, me, nobody will like to pay tax. But if you do not pay tax, there won't be any military, so Chinese, Pakistani or American will steal all your wealth. So you better shell out some of your wealth so that you can protect it from Chinese, American and Pakistanis. And therefore, there is a wealth tax or whatever other taxes. So what is the least bad tax? The least bad tax is inheritance tax, but the problem is too much of delay and siphoning out is possible. Wealth tax is the second least bad tax, and least bad because siphoning out is not easy. You cannot hide the wealth, you cannot hide the construction. There will be some discrepancy in valuation, but not more than 10, 15, 20%. And after that is income tax, and the worst tax is all these regressive taxes, tax on food or sales tax or excise or whatever, and they should be abolished. So excise too should be abolished. So that is all these things I have given in chapter 25. It is a bit technical chapter. I request you to read and put your comments on Right to Recall group community in Facebook. Thank you.